Hey, what's going on? I'm Metta World Peace, former New York Knicks player, New York City legend, and you are watching Taking Stock.
Time to rock and roll on this Thursday, June 11th. 2 minutes to go here into the closing bell and only 2 days to go until Game 5 of the NBA Finals. Stocks rebounding at least a fair bit today, to say the least. We were already in positive territory, and then we got this tweet on social media, or this post, I should say, on Truth Social anyway, from President Donald Trump, calling off planned strikes against Iran that had been expected for a third consecutive night. The president saying on social media at 1:28 p.m. Eastern, I have canceled the scheduled strikes and bombings against Iran this evening. Then we saw the S&P 500 jump 1.1% in 3 minutes alone. That largely defines your tale of the tape on this Thursday afternoon. The S&P 500 expected to finish not quite in record-setting territory, but after all this upward momentum, probably not very far off, up 1.8% into the close. The Dow 30 up 1.9. The New York Stock Exchange Composite Index getting a big bump, up 1.5. And the small caps, the best of the bunch, looking like OG Anunoby on the day, up 3%. Industrials, materials, and tech doing the heavy lifting in the S&P 500 today. Energy, the lone underperformer into the closing auction. Mag 7, a bit of a mixed bag for the big tech stocks. Tesla, the biggest leader. Microsoft, the biggest Mag 7 laggard. The great Einstein of Wall Street, Peter Tuchman's on deck. We'll get his take on today's tape right after the bell and much more. But first, the team from Enersys here to ring the closing bell. They'll also be on the broadcast. Much more Taking Stock coming up live after this. There you have it, and your final tale of the tape on this Thursday, June 11th, the S&P 500 in positive territory. Don't call it a comeback after several days of selling, but it is a very strong tape for equities. The S&P up 1.75%, the Dow up almost 1.9%, the New York Stock Exchange Composite Index up about 1.4%, and the small caps up 3%. Also catching a bid on the day, the major airlines, as we did see West Texas and Brent both fall about 3% in the session. Defense and aerospace stocks having a very good tape today. Healthcare, biotech, the semiconductors, the memory stocks catching a bid. SanDisk there leading those gains, up 7.5%. Some of the best performing names in the Dow today include Amgen, Honeywell, and Boeing. Your Dow 30 laggards, Chevron, Microsoft, and Salesforce. Let's bring in the icon himself, the institution inside the institution, the great Peter Tuchman, the Einstein of Wall Street. Thanks for joining us for a post-bell interview today.
Love it, Taking Stock.
Okay, so here we go. So 1:28 p.m. was the post from the president. We were already in positive territory.
Correct.
And then the S&P rose over a full percent in just a few minutes.
And that was basically saying that we have a plan. Within 3 to 5 days, we're going to have a full deal with the Iranians, and that it's all, forget about what happened yesterday. It's all fine and good, and we're off to the races. And that's what we've talked about, that if we, look, we've had a couple of like tickles of that it's going to be over, we have a deal. We've seen this before. So I'm not hanging my hat completely on it, but the market did. The market was dying for a reason to go higher. And we got it. I think I would say at least half of that rally was a short cover, because people have been setting themselves up on the short side, right? Apparently there's some massive whale. It's all over social media.
Oh, yeah.
Somebody bought $115 million worth of an S&P short position. So people have been waiting for something on the dark side to happen. And so there have been some major short positions out there. When something like that happens, you're going to see the initial move is going to be probably a bot that sees the social media content and grabs it. Then you're going to see a little bit of the buyers who just want to get in on the quick run. And then the rest of it you're going to see as a massive short cover.
The president has repeatedly said we're close to a deal, and then we find out we're not close to a deal.
Correct.
Strikes are on the table, and then he takes strikes right off the table.
Correct.
Are you surprised that really hasn't jostled the thinking of a lot of investors?
Well,
because the market's looking for reasons to keep pushing up.
Yes, it's jostled a lot of investors, but there's still always these fringe people. Right? The market is now made up of so many different tranches of people. There are retailers, old and new. There are old institutional people. There are day traders who are become quite large part of the marketplace. And so in the old days, you've had retail, institutional, little bit of trading. Now we've got probably 5 to 7 different tranches of people who have different agendas, right? Who have different risk-reward, ratios where they can go. And then there's their bots, and then there's a lot of, that electronic social media stuff. And so, with all that being said, it could be any number of these things. And then you've got some massive whales who are making some huge bets. A lot of people have made a lot of money, right, in the market. And so, I love this idea that we're all the little grannies, no disrespect to the grannies in Wichita, who are selling their positions to buy SpaceX. Like, I don't know what, it's almost like a meme. Right?
Right.
Like, oh my God. Like, I'm selling my position at the high, at the low, and I'm going to buy SpaceX. That's not going to happen under any circumstances. So I don't go for that story at all.
Of course.
There's obviously some margin call, some liquidation, some money, cash being raised, whether it's to buy SpaceX or not. I mean, I don't see how that happens because it's coming out at 135. It'll probably open from 3 to 500. God knows whether it'll open on the close, on one print. But anyway, with so many different tranches, we're seeing this week, we've seen alone, that day on Tuesday, we opened up 1%, a 2.7% reversal, then another 2 point. These are moves, these are people scurrying, these are big rotations, these are people selling chips and buying software, they're selling software and buying chips. There's so much going on, right? So for every buyer, there's a seller in all these different rotations and sectors, right? And so when you have, I think the market is reflecting the skittishness of it all, because if we went through the week forensically, one day up 1,000, then we had it down 1,000. Then we had an intraday of up 1,000, down 1,000 3 times. And then we had these crazy moves that we've had today. So it's just the market, when confused at the market's price action, just look at the market, and the market will tell you what it thinks, and that's confusion at best.
Speaking of confusion, I got less than a minute left, but we are in the middle of index rebalancing season. This is your sweet spot, Peter. Russell, end of the month, S&P next week. We got VIX expiration upcoming. What does that usually do to the equation?
Okay, so what everyone needs to understand is when you've got these companies by charter that need to have certain percentages in different sectors, and they got into their positions January, February, you have to realize that they don't need to be buying more to get overweighted on these sectors. If the stocks that they bought and they were 13%, let's just say by charter in tech, and that tech position is now up 30%, well then they're way over their skis and they need to pull back on that. So not only do we have a Russell reconstitution, an S&P end of quarter, end of half year, right, rebalancing, and all those things, everybody's got to be moving stuff around globally, domestically, and so it couldn't be more of one of those months that it's like, that's got a lot of price action, and it's already being reflected in this.
Oh yeah.
Because the people who have indexes to buy or sell already know what they're going to be doing. And when they see these markets move, let's say you're a buyer, and you know you're going to be a buyer by the end of the month, and you're seeing these huge moves, you're going to be buying the dips.
Sure.
If you're going to be a seller, you're going to be selling the pops and trying to get ahead of those, because basically those people get order flow to beat the final sale at the end of the day on the last day of that rebound, right? And so they're going to be, they have to guarantee them the closing price. Anything above that closing price or below it, based on their side, that's how they make their money. So that's how we have to think of it. This is old school Wall Street stuff.
Of course, and we'll revisit it a lot in the coming weeks as we
You
have
and
these
I will talk
expiration
about
dates.
it.
Peter
Absolutely.
Tuchman, thank you for kicking things off with
Always
us.
a
Nice to see you
pleasure.
here.
Love you guys.
And I'll grab
Go
the mic.
Knicks!
Go
Let's
Knicks!
go!
Let's go Knicks! Here are the top. Wow, there we go. Here's the top analyst calls that moved the tape this morning.
Knicks!
First up, Oppenheimer initiating coverage on SpaceX with an outperform rating, a 12 to 18 month price target of $190 a share. That would be 40% upside off of tomorrow's listing price at $135. Next up, B of A upgrading Intel to a buy from underperform. OG Anunoby, dude, saying it sees a big CPU opportunity. Intel up on the day, up 200% year to date. Finally, Evercore ISI reiterating Netflix as outperformed. Shares are still down about 14% from the start of the year. Howard, we got to talk Madison Square Garden sports. How can we not? Shares reaching an all-time high of $393 today after last night's miracle at MSG, up more than 50% year to date. Holdings include the New York Rangers and a basketball team you may have heard of called the New York Knicks. Market cap has doubled in the last year to nearly $10 billion. CEO Jimmy Dolan, one win away from an NBA championship, Game 5 Saturday night in San Antonio. And now in part two of this installation of NYC Innovates, Cheddar Zone Chris Castellino explains how the historic Brooklyn Army Terminal is being transformed into a hub for climate innovation. Take a look.
Most New Yorkers commute right past it. a massive complex of iron and concrete along the Sunset Park waterfront, a relic of a past war and another century. But step inside these walls today and you'll find something surprising. I'm standing inside the historic Brooklyn Army Terminal, where today's startups are testing the technologies to build the cities of tomorrow.
We're taking photos of Pier 4, looking for any type of damage to the structure.
There are a billion bikes in the world. We don't need to replace them all with e-bikes.
Every 30 seconds, somebody is safely swapping a battery.
In this episode of NYC Innovates, we'll find out how the walls of history transformed into a laboratory for what comes next. We'll discover why New York City invested $100 million to revitalize this waterfront complex, and meet the companies using these streets as their secret test track before their technology hits yours. Stay with us. In New York City, more than 80,000 app-based delivery workers depend on e-bikes to earn a living. And since 2022, 30 New Yorkers have died in e-bike battery fires. Pop Wheels was built to change that equation.
Pop Wheels is urban scale battery infrastructure for the people who power cities. So you can think delivery workers, food cart operators, folks who need to get around to power what they do, but don't have access to safe, reliable battery infrastructure today. What we do is we're putting out urban scale battery swapping stations where folks can come in, check out a battery, ride it around or put it in their food cart, and then return it, get a new one, and keep going.
Here's how it works. A delivery worker bikes up to a kiosk, scans a QR code, and pulls out a fully charged UL-certified battery out of the cabinet. When it runs low, up to 6 hours later, the app guides them to the nearest available kiosk. The swap takes only 45 seconds.
In addition to that incredible initial 90% kind of completely stop charging at home rate, 97% of customers from that initial pilot continue to stay on Pop Wheels post-pilot. And that really shows that folks, once they start using this, this is how they want to operate. We've heard reports from some of our customers of them earning $2,500 to $5,000 a year more because they were using Pop Wheels and weren't restricted by their batteries anymore.
The fire-safe battery swapping stations Pop Wheels developed here, the first of their kind in the world, were essential to earning FDNY approval for citywide deployment.
It's hard to build things in dense, complicated urban environments. It's hard to find places to try new things, to be experimental, to be able to be iterative and make things happen. Battery fires are scary. Having partners who are willing to, like the EDC and like BAT, who are willing to kind of go the extra mile and work with us to be able to say, let's deploy here, let's figure out how all the mechanics work, gave us all the inputs we needed to be able to start being able to deploy to scale after that. We couldn't have done what we're doing today if we hadn't been at BAT a couple of years ago.
Today, Pop Wheels has conducted more than 250,000 safe battery swaps in New York City. By the end of 2026, they expect to be in at least 7 cities.
We really think this is the next great piece of urban infrastructure, and we're looking forward to making that happen.
Cast Carbon is doing something that sounds almost counterintuitive, growing building materials from organic waste. Their bio-based interior tiles are designed to replace the carbon-heavy construction materials found in buildings across New York City. Construction alone accounts for a significant share of the city's total emissions. Here at the Brooklyn Army Terminal, they're not just testing whether the product works. They're finding out when and where it's ready for deployment. Today, what ships out from the Brooklyn Army Terminal are cutting-edge ideas.
What gives me the greatest hope is those who are dreaming of a different alternative, dreaming of a different way of doing things. It's a risk, but I want to put forth an idea about a technology or a solution or a service that I think can have a meaningful impact, not just in generating revenue, but in generating jobs and genuine climate impact. And those founders are the ones that give me an immense amount of energy.
We feel pressure on our infrastructure, on how New Yorkers are experiencing affordability. You know, utility bills have never been higher. And so the city and the state are really committed to investing in the green economy here in New York City. I think we are not tied to federal headwinds, right? Like climate change is going to continue to be important regardless of which federal administration is calling the shots. And so we as New York City are really committed to delivering on BATWorks and think that delivery of it is more urgent than ever.
A building that once supplied the tools for war is now supplying the tools of a different kind of survival. Cleaner air, cleaner streets, and a city safer for all New Yorkers. Where should we explore next? Let us know in the comments below. Your suggestion might just be our next episode. For Cheddar, I'm Chris Castellino.
Welcome back to the show. Say hello to our next guest here live on the broadcast. Sean O'Connell, President and CEO of EnerSys, a global leader in industrial batteries. I mean, let's be honest, when we talk about the picks and shovels of AI, EnerSys is what it's all about. Grateful for your time today. Nice to see you.
Thanks, great to be here.
First, how about the experience ringing the closing bell? What was that like for you?
Well, that was phenomenal for us. I mean, it capstoned an amazing year. A year ago, our stock was at about $80. We closed at almost $223 today, so really, really cool to be here for that.
Why is power so critical to the overall AI conversation right now, Sean?
Well, just because of the demand on the grid and an aging infrastructure, there's going to be a lot of gaps before that gets solved, and the only thing that can pretty much plug those gaps until it does is battery energy storage systems, and that's our industry. That's what we do. So we really power some of the most critical applications on and off the planet, and we're kind of that plug until it all gets figured out.
You just surpassed 1 year in the CEO role. Congratulations to you. What is the next chapter for growth beyond batteries for the company?
Well, so we've evolved from just being a traditional battery company. We spent a lot of time, we say, putting the SIS in EnerSys. So we developed systems, but now for our end users, it's really about end-to-end solutions. And nobody's got access to labor these days. So it's not just deploying a system, but it's the whole implementation of the system, servicing it, maintaining it, and in many cases end-of-life services. So it's really the whole solution.
You sit at the intersection of artificial intelligence, energy, and defense. Which of those three components of the conversation excite you most right now?
Yes.
Yes, it's all three. I thought that might be your answer.
So anyway, we're exposed to two of the biggest super cycles of our time, right? This energy equation, and then on the other hand, the defense and the spending that's going on, not just in the US with NATO allies, but EnerSys is the #1 battery supplier to the US defense apparatus. So we're right in the middle of the conversation about domesticating battery supply chain.
Is energy storage as important to the AI revolution as semiconductors themselves?
It is because these data centers are so power hungry, and what these batteries are doing and energy storage does, it doesn't just ameliorate this energy security issue. The energy storage component in a data center filters the power, so this unstable grid has got really jagged power. So what a battery is doing is cleaning all that up, because the GPUs, Jensen Huang's GPUs can't take all that dirty power. So we clean that up, and then we provide backup when the grid's not available.
Sean, what is the biggest thing investors still get wrong about the power side of the AI trade?
You know what I think it is just understanding the enormity of it, and all the things that we really need to do to build the infrastructure. You know, I don't think that's totally understood. It's becoming understood. The other thing they don't understand is the implications on the rest of the power grid. So powering the data center is one thing, but what about everybody else who's living around these things who aren't going to have stable access to power? And that's where EnerSys comes in across the board for our customer base.
Sean O'Connell, President, CEO of EnerSys. Congrats on doing the bell. Really grateful for your time on the broadcast today. Nice to see you.
Thanks, man. Thanks for having me.
Take good care. A lot more Taking Stock coming up live from the trade floor, the big board right after this. Very good. Welcome back to the show. Our next and final guest of today's broadcast, Pedro Miranda, is head of consumer at Solana Foundation. He joins us via Zoom. Pedro, nice to see you today. You are, of course, one of the largest blockchain networks in the world. And I got to start by asking you all about this new deal with the World Series of Poker. What's it all about, Pedro, and what will it allow players to do?
Hey JD, thanks for having me on. This is a really, really fun one. So we've announced a first of its kind collaboration with the World Series of Poker to bring crypto directly into the global poker experience. So any World Series of Poker can now buy in with Solana via MoonPay Commerce and receive their winnings in stablecoins on the Solana blockchain network. This, of course, provides fast payments and near instant access to their winnings without friction, which is actually solving a ton of problems that poker players are facing. And we're also collaborating with the World Series of Poker on next-gen poker products that we can actually bring to mainstream fans in the United States and, of course, to our global audience today.
Pedro, let me ask you a bit about the relationship between trading on the one hand and poker on the other. You're talking risk management, you're talking odds, probability. Why are these things a perfect match for one another?
Yeah, it's a great question. We were thinking about what the future of trading looks like today, and there's a ton of trading happening on Solana. We've had over $4 trillion in trading volume on the chain with equities, startups, treasuries, currencies, and cultural assets as well. And we feel that the future of trading is going to look more and more like poker does rather than investing. But for many different reasons. There are a ton of characteristics between crypto traders, traders overall, and poker players. They're analytical, they're competitive, they're comfortable with variance, they're sophisticated risk takers. And this natural overlap, not only of these characteristics, but also of these audiences. I think if you talk to any poker player, they love crypto. This led to a very natural collaboration with the World Series of Poker.
We got a lot of chatter going on here on Wall Street this week about SpaceX. What does tokenized interest in SpaceX look like, and to what degree, do you feel those conversations are really the future of private market investing?
Yeah, so tokenized, we're actually getting tokenized shares of SpaceX available on Solana day one instantaneously on the IPO day itself, which is of course tomorrow. And they're going to actually be available across different venues on the Solana network. So we have Backpack Exchange, Kraken, and Ondo. This is really important because it allows for the instant access of one of the hottest assets on the planet to a global audience. You just need a Solana wallet such as Phantom or Solflare to access one of the hottest IPOs to date. And it's part of this trend to democratize access to financial and social opportunities that you're seeing a ton of retail and institutional interest coming in on Wall Street. But we're making it accessible, we're making it frictionless, and we're making it extremely cheap for folks to transact and get access to SpaceX.
Pedro Miranda, grateful for your time. Take good care. We'll talk to you again soon. Pedro, head of consumer at Solana Foundation. Don't go away. Want to know a lot more? Take a stock on up live right after this. Time now for a few headlines. Welcome back to the show, by the way. In the world of fintech, crypto, and AI at this hour, the crypto majors in positive territory in no uncertain terms. Bitcoin and ETH both up 3%. Solana, the big winner, up 5.5%. Next up, Citigroup launching a blockchain-based platform that allows institutional clients to buy tokenized shares of private companies. It's a move aimed at expanding access to hot pre-IPO names as firms stay private for longer. And finally, Coinbase set to roll out Coinbase for Agents. It's a new platform that allows AI bots to trade crypto, manage portfolios, and make payments on behalf of users. In case it wasn't already clear, the future is certainly here to stay. Money 2020's very own Scarlett Sieber is now back to explain all the ways that fintech companies actually make their money. Take a look.
I'm Scarlett Sieber, Chief Strategy Officer here at Money 2020, and this is how fintech companies actually make that money, where credit meets reality. Speaking of credit, today we're going to be talking about Nova Credit and the simple question it answers: what happens to your credit history when you move countries? Nova Credit lets lenders evaluate international consumers by translating foreign credit data into formats local systems can use. This is a big issue, and it happens all the time as we're becoming more of a global world. So how does Nova Credit actually make money? First, lender integration fees. Financial institutions pay to access alternative credit data. Second, per decision economics. Each credit decision using Nova's data contributes to that revenue. Third, expansion through migration trends. As labor becomes more mobile, credit portability becomes more valuable. Credit doesn't disappear at the border, but systems usually treat it like it does. Nova Credit monetizes that gap. And with that, that is how Nova Credit actually makes money, by turning global movement into underwriting signals. Have a fintech company you want broken down without all the buzzwords? Drop it into the comments, and it might just make the cut. In the meantime, back over.
Welcome back to the show. Before we give you an update about what to expect tomorrow here on Wall Street, get you quickly caught up to a big tech name we are following after hours, just reporting quarterly results. The team from Adobe shares down 5%. We will see what information we continue to learn on that closely watched earnings call and how investors digest that information into tomorrow morning's open. Speaking of tomorrow morning, we will get the early look at the preliminary numbers for the month of June for consumer sentiment. That's a big one out of the University of Michigan, Ann Arbor, as the great Peter Tuchman walks behind me. Also tonight, Game 5 of the Stanley Cup Finals. Your final tale of the tape: the S&P 500 up 1.7, the Dow up 1.9, the New York Stock Exchange Composite Index up 1.4, the small caps up 3%, the Knicks up 3-1. Thanks for watching today's edition of Taking Stock. Have a good night. We'll see you again tomorrow.